Hey, welcome back inside our proactive newsroom. And joining me now with Anthony Ginsberg. He is the CEO of Gins Global Index Fund. And of course, we're talking about our tech megatrend ETF today. And Anthony, great to see you again. How are you?
Doing great. Nice to see you, Steve.
Yeah, just remind everyone a little bit about the tech megatrend ETF and really the sort of the scope of this particular fund, really a worldwide fund, right?
Yeah, absolutely, Steve. We're actually much broader than a typical NASDAQ type of index. In fact, that's one of the reasons our price to earnings ratios, price to book are all actually a lot more reasonably valued at the moment. Our PE ratios are, for example, below 20 times earnings, whereas the NASDAQ's over 32 times earnings. Also, our mega cap weighting is below 10%. And we use an equal weighted approach, Steve. The US at the moment is just under 60% weighting. And then we also have exposure to Asia and Europe, places like China, Germany. We've got obviously leaders across each of these sub-themes, from cybersecurity to digital entertainment and cloud, blockchain as well. So often we'll have some international holdings in there too.
Yeah. Anthony, we'll talk about North America in just a second. I want to ask you about interest rates as well. But when you look at on a world scale and just where we're seeing other countries as far as technology is concerned, China, India, other ones that are coming out as well, there is a lot of talk and a lot of movement that's going on in those particular countries in relation to tech.
Yes, absolutely. Well, it's part of the issue. The reason we have such international holdings is things like robotics. You find the leaders not in the US. So with all this onshoring talk and political speak here with the upcoming election about onshoring manufacturing, and we're seeing a huge trend in that space, the big beneficiaries are companies from South Korea, the Japanese companies, that they are actually the leaders in things like robotics. When it comes to digital entertainment, we're seeing huge usage in places like China, where per capita usage across Asia for social media is far bigger than in the US, for instance. So we really see this as a global technology convergence. There are places in Germany that are also very big in gene editing, which is one of our sub-themes. But just across the board, cloud usage, for example, is going to be dominated globally. Although the US is where cloud usage started, AI and cloud are very much in sync together. They're like first cousins. And that's really a global story. The pipes, the plumbing has actually been built out across developing nations now for cloud. So you're seeing a lot of leapfrogging in technology across places like India, even Africa and Latin America too.
Yeah. Also, the wage of a worker in those countries is significantly less than in North America. So when you're working on a business like a cloud, it's built on margins, and margins are massive in India right now.
Very much so. So we're very bullish on India, although the market has run a little bit there, obviously in the last 12 to 18 months. I think what we see also is this proliferation of AI. It's predicted to be close to a $3 trillion spend in AI. But what's not being spoken about is that the annual compound growth rate for cloud is very impressive as well. That's going to be growing at around 28%, according to Gartner and some other experts. So cloud actually is a huge beneficiary of the AI spend, and this is a global issue. So as ChatGPT and Bard continue to grow across places like India, Latin America, and China, we actually see cloud being a huge beneficiary. So in fact, when you come to NVIDIA, a lot of the chips being bought by NVIDIA are being bought by the big cloud plumbing boys out there from AWS, Amazon, or Microsoft Azure. So it really is a two-pronged story. And just interestingly enough, things like social media also benefit from the tech convergence. A lot of social media and gaming is moving digitally and onto the mobile phone tech. And as you know, Microsoft did one of the largest tech deals ever. It was approved last year when they bought Activision, which seemed like just purely a gaming story, but really it's to get more eyeballs for Microsoft and for their cloud usage. So there's actually a lot of overlap and convergence. I think it's very tough, Steve, to pick just digital entertainment or just social media on its own. That's why we've actually gone for the 8 sub-theme approach.
Yeah. Let's talk quickly about North America. More importantly, interest rates, both in Canada and the US, coming down, which is a positive scene, and you're starting to feel that in the market?
Yes, we've actually seen iTech, our tech megatrend, actually gain almost 20% growth over the last 12 months. And we expect this tailwind to continue. Obviously, we're expecting further rate cuts by the Fed in November and December. And the whole idea is that, yes, the Magnificent Seven may have had a good run, but that's a very, very narrow band. And there are a lot of tech stocks across areas that are only starting to move now. Things like not just digital entertainment, but blockchain, I would say, cloud, robotics, that actually their price to earnings ratios are still at half the levels of some of the Magnificent Seven. So we're actually very positive that you'll see more M&A activity, Steve. One of the biggest issues is that with interest rates coming down, there will be a lot more corporate activity. So that's what we're looking at in the mid-cap and just the regular large cap space, not so much the mega cap guys, who I think will be restricted by the FTC here and the antitrust restrictions at the moment for the big mega mergers. So we're looking at mergers and M&A activity at the next level down.
All right, we'll leave it there. Anthony, thanks so much. Good update as always, and it's good to talk to you again.
Thank you, Steve.
All right, Anthony Ginsberg, CEO of Gins Global Index Fund.